Hello everyone, it's Thursday and you're watching Within the Frame. I'm Kim Bo-kyung. The Israel-Hamas conflict is in the Middle East, but there could be a ripple effect on countries on the other side of the globe, and South Korea is no exception. In terms of the economy, major companies such as Samsung and LG Electronics with headquarters in the region are closely monitoring how the conflict develops. Oil prices could jump if the war escalates, as the region accounts for almost a third of global supply. As money flocks to the safe haven of the dollar and gold, the won's depreciation could be exacerbated. Some say the ripple effect will be limited, albeit with some uncertainties. What are experts' views on the conflict's impact on Korea's economy? For more on this, we have invited Professor Oh Joon-seok, the Dean of Sookmyung Business School. Professor Oh, welcome.
Good evening.
Good evening. And we also welcome Professor Lee Moon-seok from the UC San Diego School of Global Policy and Strategy. Professor Lee, welcome.
Thanks for having me.
Thank you for being with us. Now, first question to our Professor Oh. Due to the military conflict between Israel and the Palestinian Islamist group Hamas, leading South Korean companies are keeping close tabs on potential business fallout. Currently, how many South Korean companies are located in the region, Professor?
Not that many, relatively speaking. About 20 companies are doing business in Israel in the corporate entity level. But other than this, counting personal business level there are many offices and startups working with Israeli partnership ever since Korea-Israeli FTA in 2018, which was Israel's first FTA in Asia. Korean companies would face a tough situation on the verge of moving toward the advanced stage of business partnership with Israel. It's quite clear Korean companies are exposed to potential damages and disruptions to their operations. Korean companies order their employees to work from home while preparing to evacuate personnel. As you mentioned, the Samsung Group runs a subsidiary in Israel, as well as an R&D center in Tel Aviv, and a research institute in Herzliya, famous Israel's high-tech hub. And LG Electronics operates an Israeli branch in Tel Aviv. LG Electronics acquired a controlling stake quite recently in an Israeli cybersecurity company called Cybelium in 2021 as part of an effort to boost ties with innovative tech companies. Hyundai Motors and Kia, both which are the top-selling car brand in Israel. Hyundai Cradle Tel Aviv is the open innovation center in Israel of Hyundai Motors, as Israel has been named as the worldwide hub of open innovation. Staying and doing business in Israel is very important at the moment. There are lots of chances of creating shared prosperity between two countries. I believe we should overcome this crisis.
Yes, I cannot agree more. So I can see that certain measures have already been taken. Now, Professor Oh, for now, the impact is expected to be quite limited in the region because U.S. already made clear that Iran is not going to intervene. But, Professor, if the conflict escalates even more, what is the potential impact companies might see? And are there any steps that could be taken to minimize such an impact?
Yeah. You are right. At the moment, there doesn't show no direct damage to Korean companies. But in the future, however, we have to think about the consequential damage, very hard to count. When it comes to people transfer, no wonder it will be a direct damage. And it's made over 570 Koreans have residency in Israel, and another 480 are traveling mostly in Tel Aviv and Jerusalem, whose business will come almost to a stop. Aftermath of financial crisis in 1998, Korean economy couldn't stick to the manufacturing base only. When Korea changed their approach, moving toward the innovation base, Israel has been a good collaborative partnership ever since 2001. The two countries established a joint R&D fund and have conducted R&D projects together since then. According to the latest version of the agreement, the investment of each in a new project has been adjusted from US $2 million to US $4 million, and the maximum government support has been adjusted from 50% to 70%. We are moving toward the maturing stage. This is why Samsung Electronics and LG Electronics made a huge investment in startups and new technologies in Israel to address ways to secure future technologies through open innovation. Samsung especially have invested in Israel startups specializing in artificial intelligence and robotics. Hyundai Motors also made a huge investment on robotics company in a way to minimize the direct consequential risk exposure. At this moment, there is no other choice but to shrink business for the moment.
All right, I see. I hope not to see any business fallout regarding our companies and startups that you have already mentioned. Now, Professor Lee, let's move on to oil prices. What impact is this conflict between Israel and Hamas having on oil prices right now, and how is the prices now?
Israel is a tiny player in the global oil production, so the direct impact of this conflict on global oil price is limited. However, there is the risk of involving the other Middle East nations who are the major oil producers, such as Iran and Saudi Arabia. This is concerning because the more than half of the crude oil reserves are in the Middle East. So on Monday, after Hamas attacked several Israeli towns, the oil futures price increased roughly by 4%. But we didn't see the further increase after that. So this is because of the huge uncertainty. The traders in the market are closely watching how the situation is evolving.
Right, I see. As you have already mentioned, Israel and Palestinian territories are not oil producers, so they are not going to have direct impact. But as you have already mentioned, if the conflict does escalate further, involving perhaps Iran and Saudi Arabia, how volatile do you believe the price of oil might be?
So, if the Iran and the Saudi Arabias are engaged in, the U.S. may impose the sanctions on those countries, and that will increase the price of the oil. So this is worrisome, especially from the Korea's perspective, because the South Korea relies heavily on the Middle East region for oil. So more than 70% of the total oil imports comes from the Middle East. So the increase in the oil price will negatively affect the Korean consumers and producers. The one fortunate news is that the 10 to 15% of the oil currently comes from the U.S. So the one question is whether the U.S. has a capacity and willingness to increase the oil production in the case of I will say, oil shock. So this is something we have to pay attention to.
All right, I see. Now, Professor Oh, military conflict in this Middle East region has also affected the Fed's decision over interest rates. But before we get to that part, we need to first tap into whether inflation in the U.S. is being managed. So how has the CPI been there, and what can we expect ahead of new CPI data that will be released soon?
To this question, Professor Lee would have updated information and atmosphere around the Fed and their DC network. But what is clear is managing inflation might be very significant for the trajectory of the economy at this juncture. Before Hamas attack, it's generally expected that it shows inflation is cooling off. CPI rose by 0.2 percentage point compared to August and 3.6 compared to a year ago. Overall price rose less in September than they did in August. Let's not forget that inflation had hit 40 years high in 2022, peaking at 9.1%. U.S. economy had to pay the price. The Federal Reserve raised interest rate quickly and sharply from March 2022 through this summer as it tried to get inflation under control. That doesn't mean prices are lower than they were. Instead, they are rising at a slower rate as for the upcoming CPI. Then what about interest rate going forward? The Fed left rates unchanged in September, saying there has been progress in its fight against inflation. It seems in wait-and-see mode now. I could see the same direction as the Fed's projection on the economy in the future. I would say there is no guarantee inflation will continue to trend down.
Right, I see. I'd like to ask our Professor Lee's opinion as well. Until even quite recently, Fed Chairman Jerome Powell said more hikes could be on the way. However, as the new outbreak of violence has become a major concern for the Fed as well, dovish words hinting at less urgency over rate hikes have surfaced. What worries do the Fed have?
So the Fed has a dual mandate of maintaining price stability and achieving maximum employment. The labor market here in the US is quite strong. The unemployment rate is quite low at 3.8%. So there is no reason for the Fed to decrease the rate. So then the remaining question is whether the Fed will increase the rate to curb down the inflation, as Professor Oh said, or to keep the current rate. So you're right. The Dolby's words has come to the surface because the Fed needs time to assess the new information coming in. And for now, the Fed doesn't want to surprise the market. So the market's consensus is that the Fed is likely to keep the current rate from the 5.25% to 5.5% until the end of this year. And I expect the same direction as the market.
All right, I see. Now, Professor Oh, we cannot leave out how stock market is seeing this situation. It seems investors have already shaken off pressures driven by the Israel-Hamas conflict, with the Dow Jones and S&P 500 unaffected. What is the outlook for stocks?
Highly likely, when it's prolonged, it could be affected. In spite of the fact that market reaction remained muted, some industry watchers caution that several risks are yet to be fully priced in. Oil price jumped 4%, and global price have inched higher by a little over just 1% since the attack. Benchmark yields have dropped around 13 basis points to 4.6570%. Financial market moves not like a small boat on the ocean, and the southern Atlantic was not enough to send big waves into motion. It is, however, true market participants are not expecting this to be the end of the volatility. Yes, market believes Israel has room for a long conflict, which could sustain an extended war for 3 weeks and 4 weeks, over 1 or 2 months. But what if it becomes a longer conflict than expected? It will very likely escalate and possibly contribute to a significantly risk-off environment. Under a risk-off environment, global investors flock to bonds and golds, as well as the selling stocks. Looming global issues would be the push for further military spending globally and for further drawdown in savings and higher interest rate eventually. It will ignite the vicious cycle of economy and business.
All right, so it seems we'll have to wait and see how it goes. Now, Professor Lee, let's turn our eyes to Korean Peninsula and take a look at how the Korean economy is being affected by the conflict. First of all, there were worries that this conflict would affect the $1 exchange rate and make the won depreciation more serious. It has not shown significant volatility yet, but how do you see the situation regarding this $1 exchange rate?
So you're totally right. So after Monday, there were small ups and downs in exchange rate, but we haven't seen the big jumps, either the significant increase or the significant decrease. So again, this comes from the huge uncertainty, as Professor Oh said. So both the monetary authority and the market participants are in so-called the wait and see mode. There are many factors that determines exchange rate. The one major factor determining the exchange rate, the US and the Korean won, there has been the gap in the policy rate between the US Fed and the Bank of Korea. So under current situation, I expect the both Fed and the Bank of Korea is likely to keep the current rate, and then the gap will stay at the level, which is the 2 percentage point, the difference between these two countries. So given no change in the gap between the two countries in their policy rate, so I expect that we wouldn't see the big swings in the exchange rate until the end of this year.
All right, so we are expected to see little swings regarding this $1 exchange rate. But Professor Oh, if instability in the foreign exchange market worsens as the war escalates, are there any possible measures that South Korean authorities would be able to implement?
As Korea's trade-oriented economy, keep continuing trade surplus is a requisite for the stability of foreign exchange rate, basically. As for market measures to tackle with foreign exchange instability, it depends on affordable amount of foreign exchange reserves. There could be two sources not to lose the safety level of foreign reserves on the fluctuations. The first measure to take should be currency swap agreement. The government would prepare for a currency swap agreement with the United States, the EU, and Japan. This measure could include using Korean government's foreign exchange equalization fund to meet shipbuilders' hedging demand for their overseas order, which will increase dollar supply in the spot market. The other measure would be an active promotion of inbound foreign direct investment into Korea due to the reformation of global supply chain and the U.S.-China trade conflicts make multinational enterprise make an exit from China. In addition to trade surplus, it is right time to promote inbound foreign direct investment to Korea. It will be very helpful for building up the safety level of foreign exchange reserves.
All right, I see. Professor, one more question. So it seems there are some of the measures we can take, but how about opening up the foreign reserve that we have? Could that be another way to tackle this issue?
What you mentioned is about foreign exchange stability. I mean, the foreign exchange instability comes from the external factors. But more than that, the foreign exchange stability moves on the two track of the rail. Basically, fundamentals of the economy within the Korea should be paralleled to keep stability in the foreign exchange rate fluctuations.
All right, I see. Now, Professor Lee, what other economic difficulties could war have on the South Korean economy aside from what we have discussed?
So I believe we have discussed all the major impacts. We have discussed about the Korean businesses in Israel, oil price, the stock market, and the exchange rate. But one thing we haven't discussed so far is the impact on the Korean firms exporting toward the Middle East nations. The Middle East is not a major exporting destination. Only 3% of the total export goes to the Middle East. However, the Middle East nations are strategically important partners. The South Korea is relying too heavily on, say, the China and the US, so we want to diversify the exporting the destinations. So we may want to think about the way to support those exporters towards the Middle East who are likely to be negatively affected by this conflict, for them to keep them in business, and more importantly, for them not to lose the relations they have already built with the partners in the Middle East. That's something we have to think about together.
Right. Professor Lee, I remember seeing a report that says that many companies that are exporting to this Middle East region, many companies do not have insurance guaranteeing the kind of sales. Could that be a serious problem?
So I'm not aware of the share of the companies having an insurance or not, but there is some tendency that some sectors are concentrated. So say the construction sector or the information, the sector. So those are the sectors heavily exporting to the Middle East. But again, the share itself is not big, so I wouldn't think this is the risky factor toward the sectors, but it will be the risky factor for the companies that relying heavily on the revenue coming from those countries. So if they don't have a sufficient insurance, it's the time for the government to intervene and provide the necessary temporary support.
All right, I see. Now, Professor Oh, next week, the BOK is going to hold a rate-setting meeting. And inflation has not been contained well, with the consumer price for September having increased by 3.7% on year. However, as we have already mentioned, given the geopolitical difficulties the world is facing, the Bank of Korea might also freeze the rate. What decision do you believe the central bank will make?
In Korea, calming down inflation pressure matters more than anything else. I don't want to draw the theory like international Fisher effect, as Professor Lee commented about the gap should be kept. BOK decision will depend mainly on the duration of Israel-Hamas conflicts. Over the top of Ukraine-Russia crisis, BOK will keep checking the changing numbers and data in the market. If the inflation stayed higher than expected, especially in core areas, I mean the core inflation, it might push the BOK to start raising interest rate at this time. That will slow the economy further by making it more expensive for people and doing business to borrow money to the end of 2023. It will cast the dark forecast to the end of 2023.
All right, Professor Lee, what's your opinion on this?
I totally agree with Professor Oh's point. The most important economic indicator predicting the BOK's decision is inflation. But your original question was about the next week's meeting. Still, I expect that the BOK is likely to keep the current rate because the BOK didn't have a sufficient time yet to assess the new information coming in. And it will take several weeks or several months for us to know the involvement of other countries, say Iran, Saudi Arabia, and the US. So it'll take time.
All right, I see. Well, we will have answers next week. All right, well, unfortunately, that's all the time we have for today's edition. Thank you, Professor Oh and Professor Lee, for your time and insights. We really appreciate it.
Thank you for having me.
Thank you.
Thank you. All right, that's all for Within the Frame tonight. We'll be back tomorrow with more in-depth stories. Thank you for watching, and goodbye.